Hello, it's that time of week again for a look ahead to next week's market moving events and data releases as well, with myself, Rowena Harris-Doughty, and LCG's senior market analyst, Jasper Lawler. Jasper, where should we begin? I mean, let's start with the good old Trump. So US President Donald Trump, he shook the financial markets in the week just past, considering the whole political turmoil surrounding his administration. What I want to know is this just a minor correction we're seeing, or are investors really that rattled?
Well, when you get caught up in the moment, there was quite a big move down in US stocks particularly and in the US dollar. When you get caught up in the moment, you think, this is it. Suddenly that, this is the top in the market. But experience over the last few years tells us that actually these periods of political turmoil are actually quite good dip buying opportunities. We don't know if this is or not. It seems like Donald Trump has upped the ante in terms of his
antics.
Exactly. So they're talking about impeachment, which obviously that would completely derail any of the kind of Trump trade, inflation, reflationary trade, infrastructure spending, tax cuts, all the good things that the market were looking forward to. So obviously him being impeached would not be a good thing, generally speaking, politically and for those economic reasons. So the market's unwinding a lot. So it's turning in from a Trump trade to a Trump fade, everyone's saying now. So this move looks like it might have a bit of legs, but we've been talking for a while in these videos, the fact that actually the dollar made most of its strength in the late half of 2016. In 2017, it's been tracking lower, and other currencies have been moving higher for different reasons. And US stocks, they've dropped about 1% on this, so it's dramatic because volatility has been so low.
Yeah.
But actually, in the great scheme of things, it's not much.
Okay, well, staying on the political side of things, moving over instead on the other side of the Atlantic to the UK. A quick update on the upcoming UK elections. We've seen party manifestos being released this week from Labour, Conservatives, Lib Dems, of course, as well. We have been saying for some time that once the manifestos are released, we could see a little bit of a change in terms of polls and what's going on in the markets. From the market's perspective, though, are we seeing any new catalysts for sterling, for example, considering we are seeing such a strong lead still for a Tory win?
So at the moment, in terms of market reaction to these manifestos, the pound, or cable at least, has broken through 130. So pound against the dollar through 130. That's a sign that the sentiment is still good about the election. What could change that is the polls. Now people know what they're voting for. Obviously the polls can contract in Labour's favour, or they can expand, and Tories could really be in for a massive landslide. Markets would prefer the latter, but really it just seems so likely the Tories are a shoo-in at this point. Even if Labour closes a bit of the gap, it still seems like Theresa May is going to strengthen her hand and improve the odds of a softer Brexit, and that's really what the markets want. Labour's announced a lot of popular policies, but it just doesn't seem like public opinion is really grabbing hold of them just yet. But that certainly could change.
Still some time. I mean, is sterling then going to be an interesting one to watch next week, considering we've got the Bank of England UK inflation report hearings, and we also have Q1 GDP coming out of the UK as well?
Well, the economic data at the tail end of last week was very good. That's what pushed us through 130 pound against the dollar. The retail sales were very strong in April. So there's some indications that actually Q2 is looking a lot better than Q1. So that actually maybe removes some of the emphasis, the importance on the Q1 data. But I think this Bank of England meeting, the Bank of England hearing, it's the inflation hearings, that's going to be a big deal, depending on if Mark Carney tries to rock the boat a bit. He's generally very cautious on Brexit. Very much talking up the possibility of inflation outstripping wages, and that is something that we saw officially take place last week.
Yeah.
Inflation data came ahead of expectations, wages was slightly soft, so now there officially is a squeeze on the cost of living taking place. So that will be a drag on the economy. So it depends whether he chooses to emphasise that or just the fact that inflation's heading higher. The economy's still doing all right. Probably we don't need to have rates at the current levels. They should be higher.
Okay, what about the FOMC meeting minutes Wednesday evening? Is there anything really for traders to look out for there?
Well, the dollar's been tanking. Obviously, that's largely been as a result of the Trump unwind. But obviously, the Fed's kind of intertwined with that because even though the Fed never put Trump-led stimulus into their forecast, they specifically said They didn't include any kind of forecast for fiscal changes because obviously it's not enacted yet, and that's proven pretty like a good idea because it's looking quite doubtful that Trump can get through his policies when there's so much scandal throwing around. But the markets, on the other hand, they were pricing in some stimulus from Donald Trump. So that's kind of been priced out of the dollar. So now it's up to the Fed to just say, well, actually our expectations are, as they were. Looks like the economy is still trundling along all right. Q1 was maybe a bit of a misfire. But if they show confidence that Q2 is doing all right, then we're still on for a June rate hike, and then maybe the dollar can bounce a bit.
Okay, well, before I go on to talk about commodities a little bit and gold as well, dollar yen's actually been doing quite well, obviously on the back of the whole Trump situation and kind of political turmoil that he's causing as well, is it not?
Well, it had been. So it's been quite a dramatic turnaround. So dollar yen was very much on the up because Macron won in France, and so there was very much less need for a safe haven. But obviously the Donald steps in and created that need pretty sharply. And so it's been a move like this in dollar yen. We're down 400 pips last week. So actually we're back down. It's 110 is a big support in dollar yen, and 114 was a level what we fell down from. So we're kind of back in a range now in dollar yen. And it depends whether this situation with Trump escalates, I think, as to whether that dollar move continues down and the yen starts picking up again.
Okay, well that actually leads quite nicely then to wrap up with a little talk on two of my favourites, gold and oil. Gold, obviously, we've just been discussing the reasons why, that it's been doing quite well at the moment. Oil, on the other hand, we've seen a little bit of a pullback ahead of OPEC's meeting next week. What's your kind of outlook or update on those two?
Well, we were talking about that 12.15 level in the market analysis webinar Monday. I wasn't actually that confident it would hold. It was a Fibonacci level. It was a strong daily rising trend line there. Technically, it was a big support level, but gold was tanking at the time. But because of we had a couple of days where it picked up really around the time that Trump fired FBI Director Comey, and then when the talk of the memo, etc., came out, then obviously it flew higher. And so now we're right back in there with gold. 1260 is where we kind of finished the week-ish, and that's a big level on the chart too. I think if we take out 1260 convincingly, then actually we look like we're moving back towards 1300 again, which is quite a dramatic turnaround for gold. Obviously, big one for this week is the OPEC meeting.
Yeah.
That's on Thursday. To some extent, Russia and Saudi Arabia have already pre-announced that they are going to extend the output cuts. Oil hasn't made up all its losses from when it really fell out of bed. So that to me suggests that the market kind of knows that this was going to happen anyway. I would expect it to be a positive oil event once they actually confirm it at the meeting. But I'm not sure by itself it's going to be enough to really push oil convincingly, say, above $60 a barrel, just because US production has been so stubbornly high. So, I think it could end up being a little...
Can we see a short-lived rally?
Yeah, exactly. And then maybe a fade buy the rumour, sell the fact could be one of those.
Okay, Jasper, thank you very much. I'm afraid that's all we have time for today's week ahead. But just before we shoot off, a quick reminder, we've got Jasper's market analysis live webinar taking place 12:30 p.m. BST on Monday. So make sure you sign up online at www.ltg.com. That was a nice little plug there. Don't forget to also connect with us on social media and subscribe to our YouTube as well, because we like to keep you updated with all the latest market analysis. And last but not least, good luck trading. See you next time. Goodbye for now.